Good morning, everyone. Today we are going to discuss Financial Reporting Statement and Analysis, Unit 1. In Unit 1, we have meaning and concept of accounting and users of accounting information. So let's first discuss about need for accounting. So in any modern economy, it is necessary to keep record of production, sales, profit, etc. for any business activity, be it related to production or trade or services, involves some expenditure and return. Here we are talking about business. So for a business, we need all kind of record need to be written. That's why there is a need of accounting. This is it is therefore necessary to have a proper record for such transaction. That's why there is a need of accounting. The record keeping activity of a business is called bookkeeping, and the result of such transaction is found out by accounting. That's why we can say accounting is a very necessary activity for any business regarding recording all the transaction related to the business. Now, accounting is termed as language of business. Why accounting is termed as language of business? Because without accounting, we cannot track any transaction for the future purpose. So, in communication, the result of business operation to various parties who have stakes in business, the proprietor, creditor, investor, government, etc. Now, let's discuss about the definition of accounting given by the American Institute of Certified Public Accountant, that is AICPA. So, according to AICPA, the art of recording, classifying, and summarizing in a significant manner and in terms of money, transaction, and event, which are in a part of at least of a financial character, and interpreting the result therefore. So the thing is that whatever the transaction we need to record, these transaction further need to classify, and not only classify, these transaction need to summarize in a significant manner, and that significant manner is called double entry system of bookkeeping, by which we can easily record our transaction, and these transaction can use for the purpose of future references. By American Accounting Association, there is another definition, and the definition is saying the process of identifying, measuring, and communicating information to permit judgment and decision by the users of information. So different organization and different definition, but at the end every organization is saying कि we need proper recording of the transaction and these transactions related to the business. There is another definition by Institute of Chartered Accountant of India. The Institute of Chartered Accountant of India is saying process of recording, classifying, summarizing, and analyzing and interpreting the financial transaction and communicating the result therefore to the person interested in such information. In this definition, Institute of Chartered Accountant of India is saying not only recording is important, but after recording, these results need to communicate to interested parties, because until unless we are not communicating all the records to the interested party, then there is no use of recording all the transaction. Interested parties can be internal and can be external. Internal party termed as business, promoters, investors, and external can be government authorities, tax authorities, and others. Now, let's discuss about the process of accounting. So, in process of accounting, first of all, identifying financial transaction. So, for identifying financial transaction, first of all, we need to identify what to record, what not to record, because there are so many transactions related to any business, and we cannot record all the transaction in financial accounting. In financial accounting, we need to record only the transaction related to business and easily convertible into money. Suppose a transaction related to business but not able to convert into money value, we need not to record that transaction in financial accounting. Now, the second process is recording. So, whenever we are talking about recording, after identifying, the process of recording will start. So, again, the problem is how to record. So, for recording, we need to follow a systematic approach, and that systematic approach is called double entry system of bookkeeping, where one transaction need to debit and another transaction need to be credit, and debit always is equal to credit. After that, the process of classifying starts, because if we are recording thousands of transactions, so these transactions need to classify in a proper manner. Reason being, after recording number of transactions, for analyzing we need a proper classification, and this classification comes under the process of ledger. In ledger, we keep different accounts, and in different accounts we have specific information. For example, if we are preparing cash ledger, so in cash ledger, all the information related to cash we need to classify. Or if we are preparing a sales ledger, so all the information related to sales we need to classify in sales ledger. And there are so many other ledgers account: purchase ledger, ledger related to assets, ledger related to liabilities, ledger related to expenses, and ledger related to incomes. Now, after classifying, the process of summarizing will start. In summarizing, we keep all the balances related to different account. Why so? Because at the time of analyzing and interpreting, we need the balances related to the account, and by these balances we further prepare final account. The process of summarizing will take place in a statement called trial balance. In trial balance, we have two sides. One is debit side of balances, another is credit side of balances. In debit side of balances, all the accounts related to assets and expenses, and in credit side of balances, all the account related to income, liabilities, and capital. After summarizing, the process of analyzing and interpreting will takes place. So, and whenever we are talking about analyzing and interpreting, so analyzing and interpreting, we need to prepare two important statement. First is trading and profit and loss account, and next one is balance sheet. In trading and profit and loss account, we keep all the balances related to expenses in debit side, and in credit side all the balances related to income and revenues. The end output of trading and profit and loss account, if the income is over than expenditure, the net profit, or if the balance of expenditure is more than income, then net loss. This net profit or net loss need to transfer in another statement called balance sheet. In balance sheet, again we have two sides. First is liability side and another is asset side. In liability sides, all the balances related to liability side, including capital, because capital itself a liability for a business, and in asset side all the balances of assets. And liability side and asset side need to be balanced. That's why this statement is called balance sheet. After preparing the balance sheet, we need to communicate all this information to interested parties, and these interested parties can be internal user or can be external user, can be internal and external user. So let's discuss bookkeeping. Bookkeeping is the record making phase of accounting. The term accounting and bookkeeping are often used synonymously. Bookkeeping is the mainly concerned with recording of financial data related to the business operation in a significant and in a orderly manner. So let's discuss about the difference between bookkeeping and accounting. So bookkeeping, if we talk about the scope, bookkeeping is concerned with recording and classifying of business transaction, and accounting is concerned with recording, classifying, summarizing, analyzing, and interpreting the financial data. Here, identifying financial transaction is important, because in financial accounting we need to record only financial transaction. So accounting records only those transactions which can be expressed in terms of money need to be recorded. If a transaction has no financial character, then it will not be measured in terms of money and will not be recorded in financial accounting. Now let's discuss about transaction, a financial happening that affect the finance of the business. It can be cash transaction, it can be credit transaction. Cash transaction where flow of cash either in terms of inflow, either in terms of outflow. But when we are talking about credit transaction, in credit transaction, on the day of transaction no inflow and outflow of cash, but in future inflow and outflow of cash will happen with a promise to pay. Now second one is recording. Accounting is concerned as an art of recording business transaction in a systematic way. Recording is done in the book called journal, and the end output of journal is journal entry, and the process of recording transaction in journal is called journalizing. Now let's discuss classifying. It is systematic analysis of recorded data. It is the process of grouping of transaction or entries of one nature at one place. This is done by opening accounts in a book called ledger. In ledger, We keep different accounts like cash account, bank account, furniture account, machinery account, different liabilities account such as creditors account, different assets account such as debtors account, furniture, machinery, and as and when required, number of accounts as per the need and demand of business. Then summarizing. Summarizing is the art of presenting the classified data in ledger in a manner which is understandable and useful to management and other interested parties. This involves preparation of final accounts, which includes trading and profit and loss account, commonly known as income statement, and balance sheet. Now, analyzing and interpreting. The recorded financial data is analyzed and interpreted in a manner that the end user can make a meaningful judgment about the financial condition and the profitability of business operation. Profitability of business operation is most important because a business is meant for profit. Maybe there can be losses, but with the intention of profit, a businessman start a profit. Then this whole process, recording, classifying, summarizing, and analyzing. At the end, when we prepare final account, the conclusion of final account will show the financial position of a business at a given point of time, as well as these data showcase whether the business is profitable or not. After doing all these tasks, the important task is communicating. Thing is that after recording, classifying, summarizing, and analyzing, if we are not able to communicate our data to interested party, then there is no use of doing all these activities. So communicating the data to the interested party is more important. This is done through preparation and distribution of accounting reports, which includes, beside the useful income statement and the balance sheet, additional information in the form of accounting ratio, graphs, diagrams, and cash flow statement. Now, moving to bookkeeping. Bookkeeping is the record making phase of accounting, and the term accounting and bookkeeping are often used for the purpose of recording. Bookkeeping is mainly concerned with recording of financial data related to business operation in a significant and orderly manner. These are the users of accounting information. So owner want to know about the business, the situation of business, whether the business is profitable or not, and what about the financial situation of any business at a given point of time. Another important user is management who is managing the whole business. They want to strategize the business for future purpose, so definitely they want to know about all kind of information related to business, whether the business is profitable or not, whether the assets, movement of assets and movement of liabilities, and other things. Similarly, investors can be internal, can be external. Internal investor already invested in the business, so they want to know about all kind of financial information related to business. After that, they can take a decision to invest further in the same business or not. or investor can be the potential investor or the first time investors. After analyzing the financial situation of business, they can take the decision to invest in business. After that, creditors and financial institutions, they also want to know about the financial situation of the business so that they can continue their dealings with business. Employees, the important part, whosoever is working with the current organization, want to know about the financial situation of business. Government, the most important part, government also want to know the movement of business. Then researchers, there are a number of researchers who are doing research in different sectors. They also want to know about different sectors so that they came up with certain good research and they can predict about particular sector. Other than researchers, normal public also want to know about the situation of business. Now let's discuss the objective of accounting. The objective of accounting is, number one, to maintain the record of a business. Very important. If a business is not maintaining the record, then for future evidence they don't have any kind of written document. For legal evidence they don't have any kind of written document. Number two, to ascertain the operational profit or loss. As we earlier discussed, business is meant for profit or it can be loss. So for ascertaining profit or loss, a systematic records are important. Number third, to depict the financial position of a business. For depicting the financial position of business, we need financial data, and that these financial data not only for 1 year, it's related to several years so that we can prepare the comparative financial statement or any other researches. After that, the fourth objective of accounting is to make the information available to various groups and users, by which they can connect to that particular business for different purpose. If a potential investor want to invest, he or she can invest on the basis of financial situation. If a already invested investor want to increase their fund in particular business, they can also take the decision. Now number 5, to facilitate rational decision making. Rational decision making is also important for the growth of any business and to compare a business to another business. Now, advantages of accounting. These are the advantages of accounting. Number 1, it serves as a historical records. As we earlier discussed, the primary task of financial accounting is to record the transaction. Number 2, to facilitate the preparation of financial statement. When we are talking about preparing of financial statement, so for preparing a financial statement, we need systematic data in a form of recording. Number third, to supplies information to interested person. Interested person can be internal and can be external. Next, it facilitate comparative study of the performance of business over different periods. After that, it provide evidence in case of dispute. is also very much important. If any kind of dispute related to business, if a business is having recorded facts, it can be provided as a legal evidence in court and dispute can be sorted out. Then it helps to forecast the future. For forecasting any future of business, we need written records. On the basis of these written records, we can take any kind of decision related to business. It can be the expansion of business, it can be the opening of any new branch in any other city, or on the basis of these, a business can take decision for mergers and acquisition also. It provide information for judging the efficiency of business. This is also important. If a business is profitable from past 5 years, so we can predict about that particular business. Then it is useful in getting loans. Also a very important thing, if a business want loans from financial institution and banks, these banks and financial institutions want the financial records in terms of balance sheet. So if we will not follow the process of accounting, we cannot have these written documents. Next, it helps in valuation of goodwill at the time of dissolution, at the time of liquidation, at the time of merger and acquisition. We need to calculate the goodwill of the business. For that, again, we need written documentary proofs. Next, it helps in controlling expenses. After analyzing the expenditure of any business, we can cut down the unnecessary expenditure. It can be possible only when we have written documentary proof. Next, it helps in controlling employees. Yes, on the basis of financial position of any business, we can control our employees also. And last but not the least, it helps in preventing and detection of error and frauds. If any kind of wrong information written, recorded in business, we can detect it with the process of auditing. Now, these are the limitation of accounting. Earlier we discussed the advantage. Now, let's discuss about the limitation of accounting. The first limitation, it is historical in nature, as we record all the transaction as and when happened. Number two is transaction of non-monetary nature will not be recorded in financial accounting. As here we are talking about profit, so all the financial transaction need to be recorded. It can be termed as limitation, but the nature of financial accounting is we record only financial transaction. Number third, accounts record show only actual cost figure. Next, in accounting, valueless assets are also shown. Next, in accounting, price change are not considered. This can be the limitation of financial accounting, but for removing this limitation, we have price level changes accounting. In that accounting, we can overlook this limitation. Next one is, it is not an exit science. So whosoever says ki accounting is not an exit science, so in this I can say accounting is based on certain rules, regulation, and facts. On the basis of that, financial accounting works. So this limitation also can be overlooked. Next, user of different accounting methods reduce the reliability of accounts. And last but not the least, information recorded in account is influenced by the personal judgment of the accountant. Yes, but to overlook this limitation, we have auditing, by which we can correct this. Now, let's discuss the scope of accounting. The scope of accounting is extended to various form of business. There are a range of arrangement of business organizations. The principles of accounting do not change, though the form of organization change, yet disclosure requirement may alter or change as per the form of business. Government norms, rules and regulations are different for the different business which one has to consider. Hence, the form of business organization play a significant role to reap the benefits. In some cases, the transaction recording also change with the change in form of organization. Now, these are the form of business organization. First one is sole proprietorship. In sole proprietorship, only one owner who manage all the tasks. In partnership, at least two-person with a common objective for achieving a common goal came together, and in India it will come under Partnership Act. Next form is Hindu Undivided Family, commonly known as HUF. In HUF, the eldest member of the family, called Karta, and other members helps in running the business. Next one is Cooperative Society, where the group of person form a cooperative society. And next one is company, commonly known as joint stock company. Now, these are the branches of accounting. First one is financial accounting. In financial accounting, we record all the transaction related to business in financial nature. The second branch of accounting is management accounting. There is a very famous saying, when financial accounting ends, management accounting starts. It means all the data record in financial accounting helps management accounting for taking different decisions. Without financial accounting, we cannot think about management accounting. And next one is cost accounting. In cost accounting, basically we work on the cost of the product and other cost factors, and how to reduce cost and minimize profit. But the most important accounting is financial accounting. That's why financial accounting is the backbone of all the accounting. Now, financial accounting, let's discuss about financial accounting. It is the original form of accounting. It is mainly confined to the preparation of financial statement for the use of stakeholders. Stakeholders can be internal, can be external. The financial statement, that is the profit and loss account and balance sheet, shown them the manner in which operation of the business have been conducted during a specific period. Now, let's discuss about the management accounting. It is the accounting for management which provides necessary information to the management for decision in its function. According to Chartered Accountant of Management accounting is the application of professional information in such a way so as to assist the management in the formation of policies and in the planning and control of the operation of the undertaking. Let's discuss cost accounting. The main purpose is to analyze the expenditure involves, so as to ascertain the cost of various product manufactured and fix the price. Helps in exercising control over the cost being incurred. Involved in estimating cost in advance and detailed analysis. Cost accounting enable a company to ascertain the cost by applying the costing principles, techniques, and methods, and analyzing the divisions from budget or standard costs. So, we had discussed about financial accounting, cost accounting, and management accounting. But the backbone of all accounting is financial accounting. There are another form of accounting. On another one is forensic accounting. If we'll talk about forensic accounting, we can discuss about the financial fraud. With the help of forensic accounting, we can easily identify, track the financial fraud, and in forensic accounting, focus on legal affairs such as the inquiry into fraud, legal cases, and dispute and claim resolution. Forensic accounting need to reconstruct financial data when the records are not complete. This could be to decode the fraudulent data or convert a cash accounting system to accrual accounting. Forensic accounting are usually consult who work as a project basis according to accounting tool. Forensic accounting, also known as legal accounting, enables calculating damage or setting dispute in legal matters. It involves in depth investigation, carrying out reconciliation. The accounting, such as accounting techniques, normally comes into play when there are suspect of fraud, mismanagement inside the entity. Now, fund accounting, it deals with keeping the record of funds of non-profit business entities. Most importantly, separate funds accounting are maintained for separate work like welfare scheme of different nature to ensure proper funds utilization. If such an entity has raised X fund for helping to educate the children and Y fund for widow women, fund accounting ensure that the fund for the designated cases are utilized for the same purpose without any division. Now, government accounting, this branch of accounting is prevailed in central government, national government, and state government budget allocation and utilization. Keeping record ensure proper and efficient utilization to the various budget allocation and safety of public fund. So let's discuss the objective of accounting. To maintain, the main objective of accounting is to maintain the business records, to ascertain the operational profit or loss, to depict the financial position of the business, to make the information available to various groups and users, to facilitate rational decision making. Let's discuss about the internal users. Internal users are the users who work in the organization and have direct interest in working of the company. The various internal users are as follows: owners, shareholders, management, employee, External users are creditors, short term creditors, investors, potential investors, tax authorities, and consumers. Government is also an external user. Government ensure that a company disclosures of accounting information is in accordance with the regulations that are in place to protect the interest of various stakeholders who rely on such information in forming their decisions. And auditors want to check the accounts. For that, external auditors examine the financial statement and underlying accounting record of business in order to form an audit opinion. Public, general public may also be interested in accounting information for a company. These could include journalists, analysts, academicians, activists, and individuals with an interest in economic development. If we talk about competitors, competitors also want to know about their rivals so that they can formulate their own strategies and they can develop their own business and they can beat the competition. Researchers, also the interested parties who want to know about the information related to business. We'll talk about researchers. Researchers, scholars make use of accounting information to conduct the various research. The information regarding various companies in a manner of a business environment. Accounting information is needed to conduct research regarding capital structure theories, asset management, credit rating, risk management, social responsibility, etc. Media. Media also want to know. It includes newspaper and various TV channels related to economics and finance need information for publishing or telecast the achievement, performance, and problems or companies. Accounting provides such information to the users. Also, the share of each company in the nation development or GDP can be ascertained on the basis of accounting information provided to the accounting records. Tax authorities also want to know about the accounting information. Tax authority include the income tax authorities, goods and service tax authorities, custom duty authorities, corporate tax authorities. These authorities require the accounting information to assess the tax liability of business, to audit the record and imposing the penalty if any default is there. Investor or potential investors. Investors are the person who have invested their fund in the business. Potential investors are the investors who have not invested their fund in the business but are planning to invest in the business. These parties need the accounting information for varied research reasons, which are as follows: to judge the future prospect of earning on investment, to decide whether to invest more in business or not, to make the decision regarding holding the existing investment or to sell it. Consumers. Consumers are the person who consume the goods and services provided by the business houses. These parties are interested to know the financial position of the business to get an idea about the price, structure, and product manufactured by the companies. Also, the Consumer Protection Association required accounting data to get to know about the social responsibilities initiative taken by the companies in the favor of consumer. So recently we discuss about all the interested parties, and these all are external parties. Let's discuss about internal parties before ending the session. So if we discuss about internal users are the user who work in the organization and have direct interest in working the company. So let's take the example of owners and shareholders. Shareholder or the owner are the person who have invested their money in the business. These persons are interested in knowing the accounting information for the following purpose. Number one, to keep an eye on the financial health of the business, to ensure the return on their funds invested, to ensure the optimum utilization of the fund, to determine the exposure of risk to the fund invested by them, to determine the profit earning capacity of the business. Now, management also a internal user. So, management, there are level of management, top, middle, and low level of management. This is the most active user of accounting information. Management needs the accounting information for the following purpose: selecting out alternative proposals, controlling acquisition and maintaining of inventories, cash receipts and payments, planning and budgeting for the future, for checking the profit earning capacity of the business, to ensure the fair return on the equities invested by the shareholders, for managing the financial property. Employees, as an internal user, also want to know about the business. Employees are internal user of accounting information. Employees are the person who work in the organization in consideration of salary and wages. The employees need the financial information due the following reason: to demand the bonus in case company is earning supernormal profit, to ensure job security, to know better about the financial company's financial position. So today we had discussed about meaning and concept of accounting and users of accounting in unit number 1. Thank you so much.